as we move into these risks, I think that'll just right off the bat, right when they go public, there is some question marks there. And so I want to talk about, when you think about a business like Endeavor that is in the talent management business, one of the biggest risks that you have is that your assets or your clients that you represent and the talent that they have to content producers. And there's always a risk that those clients may become unhappy with your services and may move on to other agents. And if you lose that, then there goes your business. And in recent weeks and months, there has been a growing controversy between not just Endeavor, but all the major talent representation agencies and the Writers Guild of America, which represents most of the television and writers in the country. Just off the top, I'll go into more detail on this, but Asit, can you give our listeners just a brief overview of what this dispute is between the Writers Guild and Endeavor, and what is the Writers Guild upset about with agents and the like?
Sure. So the Writers Guild of America represents the talent side of the equation, and there is a traditional, very simple fee equation which has been around for decades, in which writers receive a certain amount of each deal once they're represented, and go to work for the buyer of the content. The rub is that, and Nick, I believe you told me earlier that this goes back to a case from the 1970s where the WGA was upset to but agreed to a sort of a newer fee structure, which includes something called packaging fees. And packaging fees basically put out a model where a company like Endeavor is paid out of the production budget of each episode of, say, a TV series, and also retains some of the profits. This is a 3-3-10 model. So 3% of the series license fee Endeavor, or a company like Endeavor, would get up front. 3% of the license fee will be deferred, and 10% of profits will go to an agency like Endeavor if those profits materialize, which will be important in a second. So this is versus a traditional 10% commission that a writer could expect. Now, this, if you look at the perspective of the WGA, which represents the writers, this is a conflict of interest. The more the writers are paid, the less profitable a show will be, and the less of the production budget is left to pay Endeavor, which affects the rest of that formula with the packaging fees. And so WGA has basically gone to court, and they are suing not just Endeavor, but the other major talent agencies at the completely wrong time, I should say, for Endeavor. And Nick, as we've been working on this episode over the last week, it seems like every day there's a new sally in this, which is not great news when you're getting ready to go on one of these road shows and pitch your case to institutional investors. But I'll flip it back to you. That's the brief overview of the context. And listeners, I will let our resident attorney, Nick, sort of peel this onion back a little bit more for us.
Yeah. So yeah, you've seen in like I said, in recent weeks and months, this feud between the Writers Guild and the major talent agencies really flare up. And as you mentioned, the Writers Guild has recently filed lawsuits against the major talent agencies, of which Endeavor is one, saying that, as you mentioned, there's a conflict of interest between these talent agencies getting these packaging fees that get a percentage of the production budget, and that amounts to a violation of the duty of loyalty that a fiduciary owes to their clients. So in this case, the agent owes a fiduciary loyalty to the writer in this situation. And if you are taking a percentage of the profits of a show, it's in your incentive to not increase the labor costs of said show, therefore to keep the profits higher. And so there's a clear conflict of interest there. However, there are some question marks over whether this is really caused a net harm to writers. So to prevail on a claim where you're alleging a violation of the duty of loyalty, you have to prove that there was harm and that there was no kind of consent by the plaintiff to the agent's behavior. And in this case, over the past 5 years, Endeavor has called out that only 5 series on ABC, CBS, NBC, or Fox have even generated back-end profits, so where those production rights would kick in. And so only for a small percentage of productions is this conflict actually materializing? And so for the vast majority of cases, Endeavor not taking their 10% traditional commission from their clients actually results in most cases, their clients getting a 10% higher payout than they would otherwise. So it's to be determined how this case is going to play out. There's also the Writers Guild is suing all the talent agencies, alleging that they are price fixing. It's a horizontal price fixing allegation. I don't think that one is going to go forward. It's just very difficult to prove. You need a smoking gun, an email or something that says, hey, we agreed to fix prices at this price. But then there's also a third lawsuit going on, also an antitrust lawsuit, where you've got all the talent agencies countersuing the Writers Guild of America, and William Morris Endeavor was the first one to do so, filing suit in Los Angeles federal court on June 24th. They have an antitrust case going back the other way, alleging that the Writers Guild's move. A little bit more background here. The Writers Guild passed a new code of conduct back in April. Part of that code of conduct required that any agency that would do business with the writers would have to sign on to it. And the provisions of that code of conduct prohibited agencies from engaging in packaging fees, as well as something that Endeavor also does, producing their own content in-house. Which, when you're producing your own content as well, you could see you become management as well as representing your clients. Well, in relation to that, so 7,000 writers have left their agents since that has taken place. I believe they say that I think 1,500 of those have left from Endeavor. So anyway, related to that lawsuit, Endeavor and the rest of the major talent agencies have countersued the Writers Guild of America, alleging a concerted refusal to deal, a group boycott that even violates the antitrust waivers that traditionally labor groups get from antitrust provisions. So all that to say, all these talent agencies suing the Writers Guild of America, the Writers Guild of America suing the talent agencies back and forth, that resulting in Endeavor potentially losing a meaningful number of its writer clients. Coming back to the investing point of view here, when you look at the uncertainty when it comes to Endeavor being able to keep its talent in-house, one last thing I'll mention is the WGA is directly going after Endeavor's IPO. On July 2nd, they filed a letter, directed at potential Endeavor investors, laying out the conflicts between WGA and Endeavor. When you see all this playing out, how concerned does this make you for the IPO and also just for the business moving forward as well?
Let me take the business first, because the business is not as much of a concern. It's to everyone's interest that the WGA, regardless it's in attack mode now, to strike a deal with the major agencies. Either they'll get some kind of concession and peel back one or two of these, what they perceive to be conflicts of interest and breaches of fiduciary responsibility, in the form of maybe even negotiating smaller packaging fees. They'll have some kind of pullback. The two groups have to work together. The Guild needs the talent agencies and vice versa. So long term for the business, there really aren't that many concerns. However, this is it's been a strong run in the markets over the last year or two for initial public offerings. And so if you think about it, Endeavor, which is not a tech company, although they are investing in smaller technology-enabled companies, they're not a hot healthcare company. They are a content company, which has a good look in that they are a little faster growing than your average content company. They're competing for investment dollars, and this is the rub. When you're pitching this on Wall Street, institutional investors are really, they're going to be hesitant to step up in a big way, which can affect really the pricing of the issue. And as we all know, the pricing of the issue determines how much you raise. That determines how much you'll have left to shore up working capital and pay down debt. And an institutional investor who thinks through this, can see if he or she looks around and does not see a groundswell of support because of the uncertainty around these legal issues. If there's not enough groundswell of investment, you can do the math and understand that the IPO itself really won't change the complexion of the company. And then if you're an investor, well, why would you invest in that case? There's a sort of circular logic that develops when a roadshow is assailed by issues like these. We've seen this story before over the years. So I am concerned for the IPO. And I think, it's within the realm of possibility that the IPO could be delayed or even shelved for some time. As I said, we haven't seen an amended statement yet. This initial statement was filed, I think, on May 23rd. It's about time to see that first amended statement that starts punching in numbers, where right now we just have placeholder blanks in the registration statement. So I think it's sort of a worry